Good morning. It is Friday, another week in the books, and it's commodity corner time. And wow, did we get some action in the commodities. So, what do we have going on here? Well, we see gold is totally broken down, which we've been calling for. Remember, stick with Bubba. We've been on top of this chart the entire time. Crude oil breaking down. Remember, this is what we look at. These were all indications from a chart. This isn't me bearish or bullish anything. This is everything that comes off of a chart. Grain markets had a little bit of a bounce. Look for another spot to sell. Remember, the overall trend of any chart, it doesn't matter what the name is going to follow. Now, commodities are a risk asset as a rule. It's known more of alternative investments. When they're getting sold, that's telling you that risk is coming out of the market. And that's what we're looking for. You know, I do commentary on even livestock. All the major commodity spaces are now turning into bear markets. Soybeans, wheat, corn, cattle, hogs, gold. You know, crude is still kind of hanging in there, but it's getting close. These are markets that are down 20% from their highs, 30% from their highs. This is a bearish sign in general. When high risk, when the money comes out of risk assets, they're telling you that we're going into safety assets. Take a look at the treasury bonds. As the markets were rallying last week, the bonds were also rallying. It's not the right relationship. Money is coming out and going into what they look at as safer asset classes. The U.S. dollar, although a little weaker at the end of last week, much stronger and showing you that there's fear. Notice, even though not a commodity, the VIX, the volatility index, although the markets were higher, the volatility is starting to hold. So you take all of this in combination. Weaker commodity prices, that's risk off. Gold going down the toilet, that's telling you that risk is coming off because gold is not a safety commodity or a safety asset class. It's just another asset. So when we look at the whole picture, the risk is coming off the table. And we have to focus on what's going on with these different commodity spaces. And what you want to focus on is where the money is going to there. It's really not going into the regular market. It's going into the bond market. Bond market signals a little bit of bearishness overall because that's the ultimate protection of fear, because that's the one asset class that is backed by the full faith and credit of the United States government. So, what do we see this week? Well, I think the earnings are going to be a little bit soft. I think we're going to finally start to see some selling pressure. I think that gold will probably have a little bit of a bounce, so let's look for a little bit of a bounce in gold, but I wouldn't be surprised if it trades $14.50 or so. I would probably look for oil to be under 80 bucks, excuse me, under 90 bucks this week. I look for the S&P. I think the high, we might make intraday highs, but I think the closing prints are now in for a little bit. Doesn't mean we're going right down. I think that they're in, and we should probably have some cyber action and build some consolidation up here to just make a decision where we're going to go. So, for Friday, the Bubba Show, everybody have a great weekend. We'll talk to you on Monday.